Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. Big crypto bucks. Crypto funds see record inflows, crypto projects see record funding, and crypto VCs establish massive crypto funds. Why this proves we're in an accumulation phase. Making the case for crypto. The Russian stock exchange remains shuttered, the London Stock Exchange shuts down trading, and United States stock exchanges move to delist stocks. How crypto fixes this. Cronje quits. One of cryptocurrency's most prolific developers has exited the industry, leaving dozens of crypto projects in limbo. Everything you need to know. Ripple's winning spree against the SEC. XRP pumps as Ripple secures yet another victory against the infamous crypto regulator. When could the lawsuit be resolved? Anti-crypto politicians. The European Parliament sneaks an anti-crypto provision back into a bill that's being voted on today. What's their endgame? Subtly sidestepping sanctions. As the United Arab Emirates becomes a safe haven for cryptocurrency, Russian oligarchs seek to offload their crypto holdings. Will this result in more crypto regulations? Inflation expectations. The Consumer Price Index prints another 40-year high as energy prices continue to climb. Why the cure could be much worse than the disease. And a closer look at what comes next in this week's crypto market forecast. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Last week, we saw the largest inflows of capital into crypto funds since December. Now, the primary recipients of this capital were funds related to BTC, which saw almost $100 million of inflows. ETH funds were in second place with around $25 million of inflows, and just under $9 million was invested into altcoin funds. At first glance, it looks like institutional investors are focused on accumulating Bitcoin, but the impressive crypto raises other projects have seen suggests investments into altcoins are happening in other ways. For starters, there's the NFT-focused Layer 2 for Ethereum, Immutable X, which raised $200 million from various crypto VCs to expand blockchain gaming. Cryptocurrency exchange OKCoin also established a $165 million initiative with the help of some of the largest companies in cryptocurrency to encourage the adoption of Stacks, a crypto project built on Bitcoin. Crypto project Avalanche even spun up an ecosystem fund worth $290 million to encourage developers to leverage its subnet technology. On the VC side, meanwhile, Griffin Gaming Partners raised $750 million to invest in Web3 projects. Crypto VC firm Andreessen Horowitz also partnered with Reddit co-founder Alexis Ohanian to start a $30 million crypto fund dedicated to NFTs. And all of this happened in just the last week. When you combine this with the continued decline in BTC on exchanges, the case is quite clear. We are currently in an accumulation phase, and that means it's only a matter of time before the big gains come back. Now, if you want to learn more about crypto market accumulations and distributions, you can check out my video about the Wyckoff method and how institutions manipulate markets by using the link in the description. Now, if you watched last week's crypto review, you'll recall that Wall Street has been taking Russia's invasion of Ukraine as an opportunity to buy Russian stocks at a steep discount. Besides the fact that it's clearly wrong to profit from this kind of conflict, retail investors seeing the same opportunities have found themselves sidelined by centralized stock exchanges and brokers, which have been preventing them from trading Russian stocks or delisting said stocks altogether. As it so happens, the same thing has been happening to regular retail investors in Russia, where the stock market has been closed since February the 25th. This was done to prevent people from getting rid of their rubles by investing in stocks. But the funny thing is that rich Russian investors are apparently still able to buy Russian stocks over the counter. Here in the United Kingdom, the London Metal Exchange recently stopped the trading of nickel and took the unprecedented move of cancelling pending trades as the price of the commodity spiked. The CEO of the London Metal Exchange explained that they stopped trading of nickel because a Chinese company was on the brink of getting liquidated on a multi-billion-dollar short position it had built up over the last few months. Had it met its margin call on Friday, it would have owed JP Morgan $1 billion today, which it wouldn't be able to pay. And we can't have big banks losing money, can we? Across the pond, the United States could be on the brink of delisting a series of Chinese stocks because of a 2020 regulation put in place by the Securities and Exchange Commission. Now, this just goes to show you that centralized exchanges can't be trusted, and when either big investors stand to lose money or small investors stand to gain money, they will change the rules to ensure it doesn't happen. This is one of the reasons why decentralized finance emerged and why it's become so popular. You can't stop trading on a decentralized exchange, nor can you delist assets, at least not from the back end. And speaking of DeFi, one of the top developers in the niche threw in the towel for the third time last week. I am, of course, talking about Cronje, who became famous in the summer of 2020 after releasing a DeFi protocol called Yearn Finance, which automatically moves stablecoins to where they will earn the highest yield. Andre has actually been involved in cryptocurrency for quite some time and first rose to prominence in 2018 when he worked with Crypto Briefing, reviewing the quality of code in up-and-coming crypto projects. Later that year, Andre joined Fantom as CTO and played a significant role in the project's early development. Andre then left Fantom in 2019 and took a brief hiatus from the crypto industry until Yearn Finance. After Yearn Finance, Andre disappeared again and came back late last year as a Fantom-focused DeFi developer, creating some of the project's most popular protocols, which attracted thousands of users and billions of dollars in total value locked. Everything seemed to be going fine, but then, on March the 6th, another developer named Anton Nell, who worked closely with Andre, announced on Twitter that both would be leaving the crypto space for good, leaving the 25 decentralized applications they built or contributed to in limbo, including Fantom. Anton specified that the decision had been in the works for quite some time, and the general consensus is that the pressures of developing these powerful DeFi protocols were too much for the pair to handle. However, my own research on this situation suggests that there's more to this story. For starters, it's important to point out that Fantom as a project will be unaffected by Andre's departure. As the Fantom Foundation pointed out, there are about 40 developers working on Fantom, and Andre hasn't been involved in building the base blockchain for years. Now, that said, Andre's departure could have implications for Fantom's ecosystem, and I'll be discussing that in depth when I do an update on the project later this week. So, all I'll say here is that Fantom's fundamentals suggest that its ecosystem continues its exponential growth with or without Andre. Secondly, the decentralized applications left behind by Anton and Andre are likewise in the hands of other developers, and have been so for quite some time. It looks like the only thing that's really going to change is the front ends of some of these websites, which were presumably hosted or operated by the pair. Now, as to why Andre left, I suspect that regulations were a contributing factor, or even the primary one. Russia's invasion of Ukraine has increased scrutiny on the crypto industry, especially for stuff like DeFi that lets you trade assets without KYC. As a rogue developer, Andre was likely on the radar of regulators like the SEC, especially after a scandal involving another DeFi developer who was closely associated with Andre. The DeFi protocol in question is called Wonderland, which is basically a fork of Olympus DAO on Avalanche. Now, you can learn more about that debacle and the inner workings of Olympus DAO by using the links in the description. Now, back to the SEC. As many of you will know, the SEC sued Ripple in December 2020 on the grounds that the company and its executives had sold XRP, which the SEC considers to be a security, like a stock in a company. The lawsuit alone was enough to scare centralized exchanges in the United States into delisting XRP, which is a big part of why XRP has been lagging behind the rest of the crypto market. Naturally, XRP holders are hoping that the lawsuit will be resolved in Ripple's favor, since this would give centralized exchanges the green light to relist XRP, which could cause it to rally to new highs. Alternatively, a resolution in favor of the SEC would result in XRP being out of reach of American investors indefinitely. Now, the XRP community is now one step closer to the more favorable outcome because the judge presiding over the case recently rejected the SEC's request to strike Ripple's fair notice defense. For context, one of Ripple's primary arguments against the SEC's lawsuit is that the SEC had years to let Ripple know that its sales of XRP were against the law, yet kept quiet until it sued. Now, while the case is still far from being over, the ruling seems to mark the beginning of the end of the SEC's case against Ripple, and legal documentation from the case suggests it will be over by November this year. This will not just be good for Ripple and XRP, but the rest of the crypto industry, as the ongoing case has forced the SEC to reveal sensitive information about its inner discussions related to cryptocurrency. The case itself will also set a precedent that will hopefully make it harder for the SEC to go after other crypto projects in a similar manner. Now, you can get my most recent update about the SEC's lawsuit against Ripple using the link in the description. Now, even if Ripple scores a victory for the crypto industry, it's unlikely to stop anti-crypto politicians from pushing their agendas in the United States and elsewhere. Some of you may still recall the infamous infrastructure bill that was passed late last year. Well, as you watch this video, there's a similar bill being passed around in the European Parliament. Like the infrastructure bill, the Markets in Crypto Assets, or MiCA, contains an anti-crypto provision that will effectively ban proof-of-work cryptocurrencies on the continent. What's crazy is that this provision was initially removed from the bill in late February when the bill was leaked. Obviously, the backlash from the crypto industry was immense, and the fact it was leaked in the first place suggests that there are some pro-crypto politicians in the European Parliament. Unfortunately, this seems to be the exception rather than the rule, as many EU parliamentarians have been vocal about banning proof-of-work cryptocurrencies on the grounds that they use too much energy or cause climate change or whatever other excuse they can come up with. If you watched my recent video about the comprehensive crypto mining report done by Cronje, you'll know that crypto's energy use and environmental impact is negligible, and there's ample evidence to suggest that crypto mining could help subsidize renewable energy. This seems to have flown over the heads of European MPs because over the weekend, the anti-crypto provision was snuck back into the bill, which is expected to pass today. This pesky provision states that all proof-of-work cryptocurrencies must transition to proof-of-stake, or else they will be banned. And this is something that Bitcoin cannot and will not do. As a cherry on top, the bill contains another anti-crypto provision pertaining to NFTs, particularly those that are used in a centralized setting such as gaming. Now, I suspect that this posturing has something to do with the digital euro that's currently in development and is expected to come as soon as 2023. This is because the development of central bank digital currencies in other countries has typically come hand in hand with a gradual crackdown on crypto. The good news is that there are a few more hoops MiCA will have to jump through before this provision is put into force, and many in the crypto community are calling for citizens of European countries to contact their respective MEPs to ensure this provision doesn't make it past the finish line. My fingers are crossed in that regard, and I'll be keeping you posted on any changes to MiCA or any other bill that could have significant implications on the crypto industry in my weekly reviews and my Telegram channel. Another thing that anti-crypto politicians have been up in arms about recently is the prospect of Russia evading sanctions using cryptocurrency. Although this is much easier said than done for many reasons, a report from the mainstream press claims that there may be a loophole. According to Reuters, Russian oligarchs are looking to offload billions of dollars worth of Bitcoin in the United Arab Emirates. Many in the crypto community are calling the Reuters report fake news meant to spread FUD, primarily because there is no on-chain evidence of transactions of this caliber occurring, at least not yet. What's more is that these requests to liquidate crypto assets are apparently coming from Switzerland, yet Swiss authorities told Reuters they have already frozen all Russian assets in the country. If you ask me, it's irrelevant either way, because it's not cryptocurrency that's making the evasion of sanctions possible for Russian oligarchs. It's easy to forget that there is more to the world than the West, and many countries on the eastern half of the map haven't been imposing many sanctions on Russia. It seems the powers that be are aware of this as well, because the Financial Action Task Force recently put the UAE on its grey list, claiming that there are significant money laundering risks in the country. Now, if you've watched any of my videos about the FATF, you'll know that it's closely aligned with the interests of Western countries, primarily the United States. As such, it's not far-fetched to assume that the UAE's grey list designation is a way of imposing subtle penalties on the country over its refusal to condemn Russia's actions or cooperate with the United States. If true, it not only absolves cryptocurrency of any blame in sanctions evasion, but it also reveals just how much influence the current fiat system has, and how far it's willing to go to maintain control. Oh, and if you're wondering whether any serious selling by Russian oligarchs would impact the crypto market, the answer is likely no, because all these trades will be done over the counter or OTC, and not with centralized exchanges. Be sure to keep your eye out for any big transactions in the coming weeks though, and you can find out what effects they could have by checking out my video about watching the whales. Now, if all the uncertainty around crypto regulations wasn't bad enough, this week we get to experience a whole other kind of uncertainty, the Federal Reserve's response to raging inflation. The official CPI for February came out at 7.9%, but by this point everyone knows that these figures were forged in the furnace of the fattest of fiat devils. If you still somehow trust these numbers, I strongly suggest you check out my video about the CPI and how its calculation has changed over time. If you're wondering why there's so much inflation, the answer is a combination of factors, but primarily money printing, supply chain issues, and energy shortages. The Federal Reserve only has influence over one of these factors, and that's the one it's going to discuss during its meetings on Tuesday and Wednesday. On Wednesday, Chairman Jerome Powell will be doing a press conference to clarify the Federal Reserve's roadmap for raising interest rates, and what he says could cause crypto to pump or dump. Right now, investors are expecting a 0.25% increase in interest rates, which is likely to be announced at said press conference. If Jerome comes out with, say, a 0.5% rate hike, this will catch the markets by surprise and likely cause a crash. Now, the silver lining is that it will help tame inflation, but it will still take a few months to see this effect. Conversely, if Jerome says that the current situation in Ukraine justifies keeping interest rates low for a little longer despite inflation, the markets are likely to rally. The trade-off is that inflation will continue and possibly even increase, but at least there will be a way to protect your wealth. To be clear, the former scenario is much more likely than the latter, and that's because of what Jerome said during his 2 testimonies 2 weeks ago. You can find out what he said and what implications it could all have on the crypto market by using the link in the description. Turning to the charts, we can see that BTC continues to bounce between 38k and the low 40ks. It's actually remarkable how much time we've spent in this range, but it looks like we could be on the brink of a breakout. As you can see, we've been setting slightly higher lows and slightly lower highs, creating a slight triangle pattern. If my measurements are correct, we could see a swing of around 10k to the upside or downside in the coming weeks, possibly even in response to the Federal Reserve's taper plans. So, get ready for volatility. This week's winners are Waves, Thorchain, Zcash, Stacks, and Dash. This is the 3rd week that Waves is a weekly winner, and I still can't find any other reason besides the fact that the creator of the crypto project is Ukrainian. What boggles my mind is that Waves' price pump has been unsustainable this whole time, but it keeps going up. All I will say is that there's no such thing as only up, so be careful if you're carrying a large position. Regarding Thorchain, Rune is rallying on the news that Thorchain introduced synthetic assets to its cross-chain protocol. Rune is still a far cry from its all-time high, but it has no shortage of upcoming updates that could take its price higher. I'll be covering Thorchain later this week, so stay tuned for that. Note that I hold Rune in my portfolio. Next up is Zcash, which got caught up in a wave of interest in privacy coins, which is believed to be in response to all the aggressive on-chain analysis that's been going on in the wake of Russia's invasion of Ukraine. The Zcash Foundation also announced the creation of community grants to fund the expansion of the Zcash ecosystem. The only problem is that ZEC is really struggling on the price side, despite having no shortage of institutional support. Not much else I can say there for now, I'm afraid. As for stacks, STX is pumping because of something I already mentioned, the $165 million Bitcoin adoption initiative put together by OKCoin. STX's price pump barely registers on its long-term price chart, but it still remains in a long-term uptrend. In the short term, I don't expect it to fall much further from here, though this ultimately depends on PoW. And finally, we have Dash, which also got caught up in the privacy coin pump. In addition, a Dash payment platform called Dash Direct seems to be making progress on a KYC-less MasterCard debit card that can be loaded up with Dash. Unfortunately, Dash doesn't look that much better than ZEC on the long-term price charts. Now, if you want to learn how to find an altcoin that's about to pump, you can check out my video about that using the link in the description. And that's all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. If you're looking for some stylish crypto swag for spring, the Coin Bureau merch store is where you can find those kinds of things. You can find your way there by going to the description and clicking the link. Check out my podcast too, which is available on all major platforms and is the perfect place to start for anyone wanting to learn about crypto from its earliest days. I also have a deals page, which is packed with some of the best exclusive offers in the crypto space. My gift to you good people. Thank you so much for watching, and I'll see you all in next week's episode.